Right, good evening, everyone. Hope I am audible for everyone. Right, shall we start the session? I am Nishant Adhikari. I am conducting today's session. Shall we first go through the paper? I think you already received the paper, but I will share the paper with you all. Right. Hope you can see the paper. Right, today we are going to discuss CL3 Advanced Management Accounting. With the time constraint, I'm not going to uh, take more not going to take more time giving the background information. Now you are close to the examination and you have 3 hours time to answer the paper writing paper and 15-minute time to read planning and reading and planning time. Therefore you have to answer 10 MCQs, 4 questions which give 10 marks each, and there's a long essay type question, 2 questions each give you 20 marks. You have to write in English, and those are basic information which I can give. Right, section 1, this is the section which you will receive 20 marks. Guys, please mute your mic once you have joined to the class, then it won't disrupt to anyone else. Please mute your mic, guys. Right. Okay. Now, first question, we will go through the Alpha Paints Limited APL, manufactures and sells paints. Company has produced special paint using 3 key types of material R, S, and T. At the end of the month, total material cost variance 4.9 adverse was correctly recorded in the paint they produced. Right, the 4.2 million adverse total material cost variance. The following information relates to the last month, and you can see standard cost detail, actual cost per liter, and actual usage of the liters given. The standard ratio mixing material R, S, and material T is 30 to 50 to 20%. That is the usage, standard mixture. The material price variance has been correctly calculated as 4.8 million adverse. Definitely, then your total material cost variance is 4.9 million. Out of that 4.8 million is the material price variance. Now you should be able to calculate. Here it says what is the total material yield variance for the month. Material yield variance they are asking to calculate. Before calculate that, your material price and usage variance equal to total material cost variance. And then we can see mix variance and yield variance together should equal to material usage variance. That is the easiest way. Right, with having this information, I will work out how much we can how much the yield variance for the month is. Right, I will again share the screen for the Excel sheet. Right, give me a second. Guys, when you have joined to the class, please mute your mic. Then it will be easier for everyone. Right, I'll come to the Excel sheet. I'll delete this one. Right, now total material cost variance they have mentioned. Adverse 4.9 million. Adverse 4.9 million material cost variance. Out of that, material price variance. They have mentioned it is 4.8 million. Right. Then definitely your material usage variance should be how much? 100,000. Material usage variance 100,000. Now material usage variance we can split into material mix and yield. Material mix variance plus material yield variance. Material yield both will be equal to material usage variance. usage variance. Right. Then you have that idea. Then we will work out based on the available information. What I can do based on available information, I can take material mix variance. We can calculate based on the available information. Therefore, I will take this information and we will work it out. Right. Right. First, we will work out material mix variance. The standard material mix is 30 to 50 to 20. Therefore, how to work out the material mix variance? Direct material mix variance. You can calculate the standard mix of actual material usage minus actual usage into standard price. This is the workout, right? Then we have to keep some space and we have to find out what is the standard mix. The material, you can say material R, S, and T. Then we will work out the actual mix is given, actual mix is given 1900, 2800, and 1300. Now you have these actual details. These are the actual material kilograms. Then you can take the total. You have used 6000 kilograms actual material, 6000. Now I will convert this actual material usage into standard mix. Standard mix, right? Standard mix. Standard mix says the standard ratio of mixing material RST is 30 to 50 to 20. Therefore, standard mix should be out of the 6000, 30% should be R. Out of this 6,000, 50% should be S. Out of this 6,000, 20% should be T. Then if you take the total, it will be 6,000. This is the standard mix. Now we can work out what is your mix variance. R. If I take the R, I will quickly work it out, guys. My standard mix should be 1800, right? 1800. Actual 1900. What is the standard price? The standard cost per liter, 62,000, right? It is adverse 6.3 million, right? Then S. Please mute your mic, guys. Right. Then S, it should be how much? Standard usage, standard mix should be 3000, actual 2800. The standard price is 50,000. It is a favorable variance of how much? 10 million, right? Then T. If you look at about the standard mix, it should be 1200, actual 1300, standard price 45,000. 45,000, yes. 450, 4.5 million. If you take the total how much? 800,000 adverse, right? Mix variance 800,000 adverse. Then what is the mix and yield both together should be equal to 100,000 adverse variance. Now here mix variance 800,000 adverse now. What should be the direct material yield? Yield should be how much? Should be how much? Then it should ultimately it should be 100,000 negative. Then the yield variance should be 700,000 favorable. 700,000 favorable. 700,000 favorable. Then if you go back and see your answer, 700,000 favorable, answer should be A. Hope you can see the screen. Can you see the screen? Right. Answer should be A. Answer should be A. All right, you can see, right? Okay. Answer should be A. That is 700,000 favorable. This is the answer. Right. Next one. Guys, these are variance analysis question. Then you should be able to deal with that because that particular area is a significant weightage is carrying out in syllabus as well. The second one, this is relevant to the learning curve theory. TechWorld is a company which manufactures mobile handsets. From its past experiences, TechWorld has TechWorld has realized that whenever a new design engine is employed, there's a learning curve with 75% learning rate with the exists for first 15 jobs. A new design engineer has just completed their first job in 5 hours. Note that learning rate is 0.75% of learning factor equal to minus 0.415. How long it will take design engineer to complete the 6th job? Right. Now, when we are going to discuss this answer, you have to apply learning curve theory. Who is this Sadun Sampatane? Please mute your mic. I am always trying to mute and he's unmuted again. Right. Then I will show you the calculation. Hope you can see my screen calculation. Okay. You can't see, right? Mm. Then I will share the new screen. Right. Now you have question number 2. This is similar to actually this is used from the learning curve theory. Can you remember learning curve theory? Yx equal ax power b. Yx equal x power b. This is the learning curve equation we have to use. What is the yx? If you produce x number of output, what is the average time it will take? Right. Therefore, yx mean average time it will be take. A mean the time taken by first unit. A equal time taken by first unit, first output. B is what is B? B is log learning rate divided by log 2 is a constant. Log learning rate divided by log 2. Here learning rate is 75%. Now based on that, they have mentioned that this B value of the B has given as minus 0.415. Right. Therefore, I will find out first now time taken by 6 job, you have to find it out. Then what you have to do, first you have to find out if you manufacture 5 units, how many hours it will take. If you produce 6 units, how many hours it will take. Then 5 to 6, the increment time is the time taken by the 6th unit. We will do like this. First, I will calculate time taken by 5 units. We have to calculate first 5 units. Time taken by 5 units. How can I calculate A? Y5 units equal A. Time taken by first unit, it mentioned that first job, it will take 5 hours. 5 hours into, right, multiply 5 hours into X. X is 5 units. Power log minus 0.412, right? Then I'm going to work out the value 5 into 5 power minus 0.412, right? You will get this value 2.58. This is not the total time. Remember, this is average time. This is average time. Average time. In order to find out the total time for 5 units, I have to multiply this by 5. Then the total time taken by 5 units will be 12.8814 hours. Then this is time taken by 5 units. Now I will work out time taken by 6 units. If I produce 6 units, what is the total time required? When I'm going to calculate that, then again you have to calculate what is the average time. Now here it should be 6, right? Then average time I will work out. Average time equal 5 is the average time taken by first unit into number of unit you are going to manufacture 6 power minus 0.412. Then you will get the average time. Therefore, total time I will work out total time. I will multiply this time by 6, right? Then it is 14.339 hours, right? Now, when you're going to calculate that, what is the total time taken by 6th unit? This is the total time taken by 5 units. This is the total time taken by if you produce 6 units, right? Then what is the incremental time? Therefore, total time taken by 6th unit, you can calculate. Total time for if you produced 6 units and minus total time taken by 5 units, it will be answer 1.4577 again. You can see the answer. Then I'll go back to the answer and show it to you. 1.4 වගේ තියෙනවා නම් හරි. Check the answer. Yeah, 1.442 hours is given. Sorry, I have made it here 4.15. Then it should be 1.442. Answer should be B. This is 0.1415. Right, I made 412 වගේ ගත්තා. Yeah. Right, answer should be B. Answer should be B. Then you can mark it. Then third one. Look at the third answer. Third question. Supreme Sat PLC has invested all rupees 2 million in 20 projects over past 8 years. The directors of the company are unsure whether the company has always received value for money from their investment in capital projects. They are considering introducing a system of post-completion audits. Which of the following are true with regard to a post-completion audit? Select all that apply. Now you have to post-completion audit. You have to see what are the cost and benefit. Generally, these post-completion audits, it will more look at about the social benefit when it comes to the government projects and all. They will look at post-completion audit, whether what are the social benefit, what are the economic benefit received. Right. See all that apply. Look at this one. Post-completion audits could produce valuable insight. Do they provide valuable insights or not? Post-completion audit will not prevent dysfunctional behavior by project sponsors. Project sponsors should be held liable for all negative findings from post-completion audits, right? Then only those projects starting after the audit system was introduced should be audited. That is anyway totally wrong. Now you out of these 4, what are the correct answers? Anyone can give me the answer. Anyone can, because this should be an interactive session. If you have already written, then you have to be able to answer these questions. Right, answer should be B. Answer should be B. Then you will get the average time. Average time equal 5 into 5 power minus 0.412. Then it is 14.339 hours. Right. Then I will work out total time. Total time equal 5 into 5 power minus 0.412. Then it is 14.339 hours. Then I will work out Right, anyone? I can see any answer. Okay, first one. Post-completion audit could produce valuable insight. Yes. Right. Both that is correct. Answer A correct. B, post-completion audit will not prevent dysfunctional behavior by project sponsors. No, it won't uh, apply for that part. Therefore, A correct. B also correct. Right. Project sponsor should be held liable for all negative findings from the post-completion audit. No, it should be all the parties held liable if it is a negative, not only one party. Only those projects starting after the audit system was introduced should be audited. No, it should be all the project need to be audited once it is being completed, whether relevant investment benefit have been received or not, you have to evaluate. Therefore, answer should be A and B. Right, 1.4. A company operates in export and import markets, and its operational cash flows are affected by movements in exchange rates, which are highly volatile. Highly volatile. Remember, it is highly volatile. As a result, the company has a great difficulty in establishing a budgeting system that is reliable for more than 3 months ahead. That means you can't prepare the fixed budget for the period, right? Because it is highly volatile. Which of the following approaches to budgeting would be most appropriate for this company situation? Flexible budgeting? No, flexible budget is a tool we use to control the situation. Based on actual scenario, you will fix budget, you will convert into the flex budget to reflect the current situation. Incremental budgeting? No, you will add from the last year figures percentages to the in order preparing the current year budget. Rolling budget. Based on the recent condition, based on the market condition, you will prepare the rolling budget. Therefore, answer should be rolling budget because it will be useful when the external environment is highly volatile. In a volatile environment, you have to prepare a rolling budget, not either flexible, incremental, or zero budget. Answer should be C, rolling budget. Answer should be C, rolling budget. Then 1.5. The following circumstances may arise in relation to the launch of a new product. Well, there are four situations given. Demand is relatively inelastic. First, we will read what are the requirements. Which of the above circumstances favor a penetration pricing policy? What is the penetration pricing policy? That means customers are price sensitive. You are going to charge a lower price than the competitor. Right, we will see. Demand is relatively inelastic. No, that is wrong. There are significant economies of scale. Yes. Therefore, that's why you can offer a product at a lower price. The firm wishes to discourage new entrants to the market. Yes, you are offering at a lower price, low margin you will keep. The product life cycle is particularly short, not so on, not so. Therefore, answer 4 also, the product life cycle is particularly short. No, it is a long product. Therefore, while looking at this one, answer 2 and 3 correct. Answer 2 and 3 correct. These two correct. These two correct. Then if these two are correct, the relevant answer is answer A. Answer is correct answer. Right. Then 1.6. 1.6. The fruit company FCO currently grows fruit which customers pick themselves from the fields before paying. If company is concerned that a large number of customers are eating some of the fruit while picking it and are not therefore paying for all of it. It can be, if it is a Sri Lanka or Sri Lankan company or wherever, people will eat whatever they can, then they will pay for a small amount, right? That they will do, right? As a result, the company has to decide whether to hire staff to pick and pack the fruit. Instead, The following values and cost have been identified. You have to now they are going to know you are not going to pick the fruit. They will pick the fruit and package it and they will sell the packaged product. Following the following values and cost have been identified. We have to identify which of the above are relevant to the decision. Now you are going to what you're going to do, you are going to pick the fruit and package it and sell. Then what are the relevant costs? First one, the sales value of the fruit currently picked and paid by the customers. Is it relevant when we are making the decision? Yes. Before you pick the fruit, then what is the revenue generated while customers pick the fruit and uh, pay? Then you can see whether there's a significant growth in revenue. The cost of growing the fruit, is it relevant or not? Whether customer picked or not, whether we are going to pick or not, the cost of growing the fruit is not relevant. It is a sunk cost. Remember, item number 2 is not relevant. Therefore, this one will be relevant. This one will be relevant, but this is not relevant. The cost of hiring a staff to pick and package the fruit, yes, they are relevant. It will be a relevant cost. The total sales value of the fruit if it's picked and packed by the staff instead. Yes, this is also correct. You have to compare before you start this operation, what is the revenue? After this operation, what is the revenue? Therefore, your correct answer should be 1, 3, and 4. 1, 3, and 4 available in answer D. This is the correct answer. Answer D is the correct answer. Answer D is the correct answer. Right. Then question number 7. Question number 7. The following are some of the costs incurred on a newly developed product. They have been newly developed product. Asking which of the above cost item would be included in computing the life cycle cost of the product. Uta, what is the life cycle cost of the product? Now, if the product has a shorter life cycle and they are operating in a highly competitive environment, the cost incurred over the life cycle will be considered when determining the cost of a unit. There are 5 stages in product life cycle: design and development, introduction, growth, maturity, and decline. Therefore, cost incurred throughout the product life cycle will be considered including research and development cost. Therefore, including marketing cost, which is relevant to the product. Production cost, all advertisement cost, all the costs relevant to the product will be considered when determining the cost of a life cycle cost of the product. Therefore, we will read whether these are relevant or not. Cost incurred on research study already carried out. Someone might think it should be ignored since it is already incurred. No, it has to be considered. It is not a sunk cost because when we are making a life cycle cost, you have recover all the cost associated with the product. Cost incurred on product design and development. Again, it coming under design and development stage. First stage of the product life cycle. Cost of materials and labor, this is relevant to the production cycle. It is relevant. Cost of marketing campaign and advertisements, yes, it is relevant cost of the life cycle cost. Cost of fixed production overhead, yes, it is relevant. Therefore, all of the above costs are relevant when it comes to the life cycle cost. If someone asks how to calculate life cycle cost of a unit, if someone asks how to calculate life cycle cost of unit, life cycle of a unit equal total costs incurred over the life cycle divided by total output over the life cycle. Output over the life cycle. Total output over the life cycle. That is how it will be determined. Right. Hope you have understood. Right. It is coming under life cycle cost. Those are some areas which we have learned under cost management section. 20% of the syllabus variance there in the cost management. There are topics like throughput accounting, ABC, total quality management, life cycle costing, target costing, case and costing. Those will be discussed under cost management section. You might have already discussed. Keep remember those areas. Now, next one, right? Then a local railway department is planning to construct new railway track as a measure of reducing road congestion and increasing the transportation of goods. Consider following project evaluation approaches, right? Three approaches given. Which of the above would be the most suitable project evaluation approach or approaches for the new railway track project? Right, we will see. Calculate the IRR that include cost and benefit to all the stakeholders of the project, all the stakeholders, not only the company, not only the railway department, it should be all the stakeholders. Now we can save our time, it is from the general public. Likewise, we have to calculate IRR of that include the cost and benefit of all the stakeholders. That is correct. That is a great way to measure it. Next one, calculate the total cost and benefit generated by the project to the society as a whole. Yes, actually, because we have to see what is the benefit and cost generated to the society. As an example, time saving, fuel consumption of fuel, you can reduce it, and environment pollution, you can uh, avoid it, right? On the other hand, what are the benefit? Sorry, cost. Sometimes due to the railway track, there is a sound pollution. Therefore, you can calculate what are the cost and benefit as a whole to the society. Therefore, second one also correct. Third one, calculate the NPV for all the financial cash flows that are expected by the railway department during its lifetime. That is totally wrong. Actually, this is a kind of a project which is more focused on social benefit. Therefore, financial benefit is not much important, not so important when it comes to a social projects. Therefore, answer should be A, 1 and 2 only. 1 and 2 only. 1 and 2 only. Then 1.9, question number 1.9. The following statements were made with regard to big data of an organization, right? Then which of the above statements are mostly true with regard to big data? What is big data? Big data, actually, those are unstructured, high volume data, right? Now we will see what are the relevant answer, our correct answer for this particular one. Correct එක හොයන්න තියෙන්නේ. Big data could be collected only within the organization and not from external sources. No, most of the information we collect from the external source like Facebook, WhatsApp, X, and barcode. Those are the areas. The big data can be collected anywhere in the world, and there's no internally external data sources also will be considered. Therefore, number one is wrong. Number two, big data is a huge amount of information that the organization has structured and analyzed for future decision making. Big data is not an information. Big data we need to process in order to make it an information, valuable information. Therefore, big data is a huge amount of information. That is wrong. Big data is not an information. It is a data. It is a raw data. You have to process and you have to make it as an information, right? Third, big data also included past data internally stored within an organization. That's correct. It may include past data as well in order to analyze the information, analyze the data. Therefore, third one is correct. This one is correct. The next one, there could be a cost involved in converting big data to a useful information for decision making. Yes, actually, cleansing of data and preparing those data into a meaningful form it will take some additional cost. Therefore, answer should be 3 and 4. 3 and 4 only, it is answer D. Answer D is the correct answer. Answer D is the correct answer. Now, last one. Now, look at a company has taken a decision to switch from using long-term fixed rate finance to fund its working capital to mainly short-term variable rate finance. The most possible outcome of this change would be you are changed from long-term financing to short-term financing of this working capital, right? Then what will be the possible implication? Increase predictability of finance cost? No, that is wrong. Increase risk in refinancing? Yes, it is risk in refinancing. If you make convert long-term finance, short-term finance, you have to settle them very quickly. Then if you move from long-term to short-term, you might face some liquidity problem and you might finance refinancing issues will be there. Therefore, answer should be increased risk in refinancing. Refinancing risk will be a problem because most of your debts will be due on short form and you have to pay it immediately. Then it become a serious concern. You will face some liquidity deficits or liquidity shortages may arise. Right, that's the end of first MCQ question for section 1 for MCQ questions. Hope you have understood, hope you have corrected, and I think you have received the paper in advance. Now, hope you have done it. Now we will move to section 2 and question number 2. Smart Tech Private Limited STL produces 3 product types of electric compressor N100, C500 and P300 for which 3 different processes are available. Right. The following information has been estimated for the upcoming production cycle for the 3 products. You can see selling price, direct material, direct labor, maximum demand also given, and the process time required per unit in minutes given. The process time is available for each of our process are restricted to 3,500 hours, 4,000 and 3,000 hours for XYZ respectively. Total fixed production overhead cost is 15 million. STL has been developing an optimum production plan based on contribution per limiting factor or bottleneck resource. That we have to see in which approach we are going to use it. The finance manager claimed that the labor cost is generally fixed since the employees are paid irrespective of the hours worked. The given above labor cost per unit was decided by the considering the current capacity. Look at that. The finance manager has suggested applying throughput accounting principles to develop the optimum production plan for the next production cycle. He has proposed for product ranking to be done based on throughput accounting ratio. In throughput accounting, it assumes that the only variable cost is direct material. All other costs, even though they are variable, it assumes that they are fixed. Remember, what are the assumption? The only variable cost is direct material cost. Even though other costs are variable, they have to consider them as fixed cost, right? Those are the assumptions. Then when you are going to calculate the contribution under throughput accounting, you will calculate selling price minus direct material cost. Then you will calculate the throughput contribution, right? What you have to do required. Prepare a note to the management committee on the following. Explanation as to how the concept of contribution in marginal costing differs from that in throughput accounting. As I have explained already, how it will be differ. ඕක කොහොමද වෙනස් වෙන්නේ ළමයි? Marginal costing method එකේ throughput accounting අතර වෙනස් වෙන්නේ කොහොමද? How it will be differed? කොහොමද differ වෙන්නේ? It will be differ like this. Now, in marginal costing, when we are going to calculate contribution, we will deduct all the variable cost from the selling price. Selling price minus variable cost. But in throughput accounting, it assumes the only variable cost is direct material. Therefore, in throughput accounting, It will determine contribution while deducting direct material from the selling price. So the marginal costing approach the selling price minus variable cost. But throughput accounting, how you will decide selling price minus direct material cost only. Right? You have to explain like that. Therefore, in the contribution as per marginal costing will be lower than contribution as per throughput accounting. Right? That is 2 marks. Optimum production plan per limiting factor approach using marginal costing approach. If you apply marginal costing approach, you have to determine the optimum production plan. Right. Now I will take this information and now we will work out how to determine the optimum production plan. Right. I will take this information. Yeah, I will share the Excel sheet. I hope you can see. Now I will take. There are 3 processes X, Y, Z, and these are production demand in 100, C5, 500, and P300. We'll take those 3 products N100, P500, and P300. Right. Now we have to work out what is the time available in process, time availability, time available requirement. We'll work out time requirement. Time requirement. 3 processes X, Y, and Z. X, Y, and Z. X, Y, and Z. Now, if you look at about the products, in for their capacity maximum demand is 5,000. 5,000, 8,000, and 6,000 demand. Now we will see what is the total time requirement. X 5,000 unit from 800, it is 20 hours, so 20 minutes required. Right. I will work out in number of minutes. Then process X C500 required 12 hours into 12. P300 it required 6 into 6,000. 36. Y. Y 5,000 into 80. C 8,000 into 12. Then 6,000 into 6. Is said 12 into 5,000. Right. Then 4 into 8,000. Then 2 into 6,000. Now we will take the total in terms of hours. Total hours. Right. I will take the total and make it to hours divided by 60. Right. Drag and drop total hours. This is the requirement. Now we will see the availability. Availability. We'll see X. X only 3,500. Here 4,000 and 3,000. Now based on this information, which one has the limited resource? If this one is the limited resource, because they wanted 3,800 hours but only available 3,500. Therefore, time available in process X is limited. Process X is limited. Right. Now what we will do, now we will work out Optimum production plan. Right. Selling price. Selling price. Selling price given, or we can call sales. We can call sales. Sales. Selling price is given. Selling price is given. Selling price. Selling price. Here it is 80,000, 48,000, and 40,000. Less variable cost. Direct material. Material 25,000, 16,000, and 30,000. And direct labor. Direct labor 32,000, 17,000, and 2,000. Then right. Now you can take the contribution per unit. You can take the contribution per unit. Contribution per unit. Contribution per unit. Contribution per unit. Sale price is 1, deduct variable cost. Here 23,000. Right. Now your bottleneck resource is the process X time. Then we can work out what is the contribution per bottleneck resource. It is in number of minutes you can work out, per hour also you can calculate. I will calculate contribution per bottleneck minute. Contribution per bottleneck. Bottleneck time per unit. Bottleneck time per unit. Here it is 20. Here it is 12. Here it is 6. Therefore, contribution per minute. You can divide 23,000 you have earned during 20 minutes. Then 1,150. Likewise, others also you can divide. Then you can rank the product. Ranking. It is number 1. You will give the priority. This is number 2 and number 3 given here. Production ranking. This is how you will rank the product. Thereafter, you have to decide how are you going to production plan. You have determined production plan. Production plan. Production plan. Now your limited resource is what? Your limited resource is time X, machine time, process X time. Therefore, total required, in number of minutes, 232,000 minutes are required. Right. We will see how are we going to work it out. 232,000. Maximum process X time available. Maximum process X time available, as I have mentioned, you can take the summation of the process time. This one. It is 232,000. First, you are going to produce P300. First production. P300. P300. How many minutes you have to allocate? How many minutes? 6 into output 6,000. 36,000 you have to allocate, right? Then balance 232 minus 36, it is 196,000. Second rank goes to C500. Second production, C500. Each required 12 hours into output 8,000. 96,000 required. Balance you have to allocate. Balance amount is 100,000. It has to be allocated to N100, balance to N100. Then how many units? Then you have divide 100,000 available, each required 20. That means you have to manufacture 5,000, even though you have a demand of exactly 5,000, right? Yes, 5,000. Yes, 5,000. This is how it has to be allocated. N100, 5,000.
Excuse me, sir.
Yes.
Isn't the minimum, I mean, the minimum time is 210,000. We have the bottleneck resource hours as 3,500.
Sorry. It had 3,000 by 210. 3,000, sorry, I made a mistake here. 3,500 into 60. Maximum available only 210. Sorry. Then 78,000 we have take. 78,000 we have divided by 20. Thank you very much for reminding me. Right. 3,900 you can produce. That's why I'm wondering how it exactly tallied. Then 78,000 we have to remove. And then it is 0. Right. 78,000. Right. Now your production plan you have already prepared. Therefore, optimal product mix as per marginal costing approach is right. Now we can write it down. In 100, we are producing 3,900 units. C500, we are producing 8,000, and P300, it is 600. Right. This is the 6,000. 6,000. This is the production plan as per marginal costing approach. Now we have to see how the production plan, right? Next one, with the next requirement. Next requirement, if we apply, we'll see. I will share you again the exam paper. Optimum production plan per throughput accounting approach and the throughput accounting ratio for all three products. Optimum production plan as per throughput accounting. Okay, we will go back to the calculation. Now, if we follow throughput accounting, how it will looks like. Right, I will copy this information. Now we are going to work out in throughput accounting. Throughput accounting. Throughput accounting. Right. The only variable cost is direct material. Then you can easily calculate throughput contribution. contribution per unit. Throughput contribution per unit, you can easily calculate. Now I will get it done here. 55,000. It's like this. Then now you have to calculate bottleneck time per unit. Same as earlier here, in 100 required 20 minutes and 12 minutes for C500 and 6 minutes for P300. Then I can calculate throughput contribution per minute or throughput contribution per hour. Per hour is better because when we are going to work out throughput accounting ratio, it will be beneficial. Therefore, I will calculate throughput or return per factory hour or throughput contribution per hour. Throughput contribution per hour. Throughput contribution per hour. How I calculate it? Now you will earn 55,000. This is for 20 minutes multiplied by 60. This is hourly rate, return per hour. Right. Then likewise, we will work out. Now you can see this is the return per hour, return per factory hour. Now you can ranking. Here it is number 1, here it is number 2, here is number 3. This is how the allocation looks like. Now you can work out production plan. I'll take production plan. Again, 3,500 hours are available, maximum process time available 210,000 minutes. Then first I'm going to manufacture N100. First production. Production N100. N100 you will manufacture how many units? N100, 5,000 unit, each require 20 hours. Then 100,000 hours will be used. Then balance available 110. Balance. Then next one, second production N, not N, it is C500. C500, how many hours you will use? It is 8,000 units into 12 minutes each. It is 96,000. Balance available 14,000. It will be allocated to one P300. How to work out? 14,000 divided by 6 hours each, 2,333. Then you will use balance 14,000. Right. That's how production plan looks like. Now they asked to work out throughput accounting ratio for all 3 products. Now, when you're going to calculate TAR, throughput accounting ratio, how to work out return per factory hour divide by cost per factory hour. Right, this is the ratio. Now, return per factory hour, we have already calculated throughput accounting, throughput contribution per hour already there, but we have to find out what is the cost per factory hour. Now I'm going to calculate total factory cost first. Total factory cost. When I'm going to calculate total factory cost, there are some information you have to consider. What are they? Even though they are variable, we have to consider them as fixed. That is direct labor cost. Then we will work out direct labor, direct labor, direct labor, N 100, C 500, and P 300. Now, this is direct labor cost per unit is given. Remember, it has to estimate for the original maximum capacity. Therefore, I will calculate. It is like fixed production overhead. I will treat like that. Direct labor cost 32,000 into budgeted capacity 5,000. 5,000, right? 32,000 into 5,000. Then C500, C500, 17,000 into 8,000. That is the capacity, 136 million. Then other one, 2,000 into 6,000, 12 million. Therefore, total direct labor, if I take the total, if I take the total, 308 million direct labor. Not only that, there's a total fixed production overhead 15 million. Total fixed production overhead 15 million. 15 million. Now we will calculate total factory cost. Total factory cost 308 million plus 15 million. 323 million. Total factory cost 323 million. Now we have to calculate factory cost per hour, total factory cost per hour. Then you will incur 323 million to operate how many hours here? How many hours? 3,500 hours you will operate for the process X. Bottleneck hours, bottleneck hours. You can only operate 3,500 hours. Therefore, cost per hour equal 323 divided by 3,500. 92,286. That is the cost per hour. Now you can easily calculate. Now you have the throughput contribution per hour available. Now this is the total factory cost per hour. Now we will work out throughput accounting ratio. We are going to work it out for all these three products. All these three products. Okay, return per factory hour, return per factory hour. Take the above 165,000, 160,000 and 100,000. Then take the cost per factory hour. Factory hour. You have already calculated cost per factory hour 92,000. Now you can easily calculate your TAR, throughput accounting ratio. Return per factory hour divided by cost per factory hour. 1.79, 1.73, and 1.08. Which are the highest one? Highest one is the N100. That's why we have given the priority. This is the throughput accounting ratio. Right, I wanted to memorize the things you have already learned in throughput accounting because this is a generic question, a regular question that may ask. Hope you have understood up to this point because I'm a little bit faster because we need to complete the paper immediately. I hope you all have understood. If you have any question, you can share your messages. I think you can chat. Yeah, you can chat. Yeah, chat also. I have seen some messages. I think yes. All right, 210 minutes available time, right? Can someone share the paper? It as letters the numbers are small. Sorry. I thought it is visible. All right, I will increase the font size. I hope you can see. Right. Now we will move to the next question. Next question. Question number 3. Question number 3. Can you see my screen? Question number 3. Can or can't? Question number 3. What paynoda? Nilusha and Dilshara. If you can see, let me know.
No, sir.
Hope you can. No, give me a second again. I have to share it. Right. Give me a second. I will share again. I will go to the paper. Right. Now you can see question number 3. This is relevant to working capital management. And remember, in your syllabus, there are five sections, A, B, C, D, E. The section E is relevant to the working capital management. Anyway, 10 marks question will be there in the examination. It will be mandatory, right? Therefore, you have to quickly run through this one, and we try to finish as much as possible. I'm trying to work it out. Otherwise, I can show the answer script and quickly run through. But it is better than run through the answer sheet. We can work out. Shall we quickly read this one? Suntech Private Limited SPL is a producer of electronic appliances, blah blah blah. You can read this one. SPL has reported 300 million sales, which 80% of sales are on 30 days credit period. The average bad debt is 1% from the credit sale can be anticipated. Can 1% from credit sale. Okay, right. Okay. The marketing manager has made a proposal to extend the credit period from 30 days to 60 days to attract new customers. In addition, he has proposed to give 2% discount to the customers who settles within 15 days. With this new proposal, it expects to grow the customers, grow the revenue by 20% from the current sales volume. 3,000 million into 20% volume, and all customers will be on credit terms. Among the customers, 40% of customers may take the advantage of early settlement discount, while others may enjoy the extended credit term. SPL has financed its working capital via bank overdraft facility, which interest will be charged 12% per annum. The company will be maintained 40% CS ratio throughout the period. It is estimated that the inventories and trade creditors will be increased by 30 million and 10 million respectively. Assume 360 days per annum. What they asked. Assess the financial viability of the proposed credit extension suggested by the marketing manager. Recommend alternative to options for financing working capital requirement of SPL. The finance manager of SPL was not happy on the extended credit period where he has to finance the sudden increase in working capital due to sudden change in credit policy. He is planning to take 3-year term loan to finance the incremental working capital. Explain the suitability of the decision made by the finance manager on financing the incremental working capital requirement via term loan. Right. It's a working capital question, receivable management. Now we need to work it out. I will take the screenshot of this one and then we can work out entire illustration. Right. I will take some important information. Then we can go to the Excel and we can work out. Uh, right. Now this is, I think, hope you can see. Now we will see what they can. Okay, first we will look at the present scenario, present condition, present situation. Better if you can break it down. Present situation, total sales, 3,000 million, right? 3,000 million. Yes, 3,000 million. I'll take sales in rupees million. It is 3,000 million. Credit sales, sales out of that 80% into 80%, 2,400 million. Credit period, 30 days in terms of days. Can you work out what is the debtor balance? Debtors. What should be the debtor balance? Okay, I'll quickly work out. This 2,400 credit sales you have made during 360 days. දවස් 360ක අවුරුද්දක් පුරාවට විකුණු ප්‍රමාණය 360 days. Right. Then if you have given 30 days credit period, mean 30 days sales, credit sales will be there as an outstanding. Therefore, your debtor balance should be 200 million. Debtor balance at the moment in rupees million, it should be 200 million debtors. Right. Bad debts. Bad debts. Bad debts can the average bad debt 1% from the credit sales. 1% from the credit sales into 1%. 24 million. Right. 24 million. Now give me a second. Uh, 24 million. This is the present situation. Now, next one, the proposed situation. Proposed. In the proposed situation, what will happen? You will extend the credit period to 60 days to 30 days to 60 days. In addition, if you settle within 15 days, you will give 2% discount to the customers who settle within 15 days. Right. Now, what has happened? All the sales will increase by 20% and all the customers become credit. Therefore, current sales, you have 3,000 million. 20% increase. 20% increase. 3,000 into 20%, 600 million. Therefore, your total credit sales will be total credit sales will be 3,600 million. Hope this is correct. Total credit sales will be 3,600 million. Right. If total credit sales 3,600 million, out of that, 40% customers will be settle their debts on
FQ said that 3,600 is will be the total sale, no? On that we have
which one?
3,600 you have mentioned is a total sale, no?
Total credit sales. You have to read the question carefully, Buddha, first. Because it says, with the new proposal, current sales volume and all customers will be on credit terms. All customers will be on credit terms. Right? Therefore, all sales will be 3,600 million will be credit sales. Now, what idiot will be do? No one idiot if they are giving on credit and giving a discount, will they sell on cash basis? No. Everyone will take the credit. You can read it carefully. With this new proposal, it expects to grow this revenue by 20% from the current sales volume, and all the customers will be on credit terms. Then all the sales will become credit. There's no cash sale. Cash.
Hello, excuse me, sir.
Yes.
Is that
Yes.
not the all the increased customers only on credit basis?
No, you can read
That
it
too.
properly, and Buddha, it mentioned that all the customers will take the credit sales.
Then with the earlier cash customers,
No,
right?
you have to read properly. In the question itself says With the new proposal, it expect to grow the revenue by 20% from the current sales volume, and all the customers will be on credit terms. Right? All the customers will take the credit terms. Not only new customers credit terms, all the customers will take, because, right, assume in the practical scenario, 3,000 million previously we had, 2,400 you have sold on credit. Other 600 million, they are on cash basis. Now with this proposal, why they settle early, they can take 15 days credit and they can get the 2% discount if they settle in 15 days. Why they are going and settling early? All the customers will take the 15 days credit period if they want cash customers. Right? Therefore, total credit sales will be 3,600 million. And then among the customers, 40% of customers may take the advantage of early settlement discount, while others may enjoy the extended credit terms. That means 40% of customers will settle early. That means settle within 15 days. Now we have to work out the debtors. Debtor settlement within 15 days. Within 15 days. Settlement within 15 days. Out of this 3,600 million, 40% of customers will settle within 15 days, right? Then if you work out, it is 1,440 million worth of sales. And this is for 360 days multiplied by 15. You can get the debtor balance. This is the 15 days worth debtors. Right. Then other customers will settle within 60 days. Settle within 60 days. Right. Then out of this 3,600 million, 60% of debtors will settle within 60 days. This is for 360 and multiply it for 60. It becomes 360 million. Then your debtor balance will be debtors 420 million. 420 million debtors. Then bad debt value, you can work out bad debts. It says bad debt will be 1% from the credit sales. Now your total sales are on credit. On credit. That is bad debt will be 36 million. Now we will work out what are the cost and benefits. First, we will look at what are the benefits. We will first look at the benefit value. Benefits. Benefits. Now, what has happened due to this proposal? Your sales grown up by 600 million. Sales එක 600 million වැඩි වෙලා තියෙනවා. Therefore, your contribution will grow up. Contribution from increased sales. Contribution from increased sales. Right. What is the contribution from increased sales? 600 million, your turnover went up. Contribution to sales ratio 40%. Contribution to sales ratio 40%. Then if I work it out, 600 million into 40%, it is 240 million. That is the benefit you received. Then you have to look at what are the cost. Cost. First one, you can say initially bad debt was 24 million. Now it is 36 million. Therefore, bad debt went up. Increased bad debts. It is a cost. How much? 24 minus 36. It is 12 million. 12 million. Right. Then in addition, what else? Bad debt went up by. Then if you look at about the debtor balance, earlier 200 million, now 420. Not only that, here it says creditors will inventories increase by 30 million and creditors will increase by 10 million. Therefore, you have to calculate finance cost on not only working capital change. Not only that, we have to calculate cost of early settlement discount. Cost of early settlement discount. Cost of early settlement discount. How much? Out of total credit sales, 40% settled 1,440 million. Out of that, you have to give 2% discount. That means in a value, it should be 28.8 million. 28.8 million you have to give it. 28.8. Now, finance cost on increased working capital. Increase working capital. Increased debtors. How much increased debtor value? Increased debtors, you can see increased debtors 420 minus 200. Debtors were increased by 220 million. Increased inventory, you have to add increased inventories. Increased inventory 30 million. You have to less than working capital increase. You can work out that's cash operating side. Increased creditors, it is 10 million. Then you can take the total working capital increase is how much? Take the summation. It is 240 million working capital increased. Therefore, what is the currently finance cost? Charge at 12% per annum. Interest will charge at 12%. Therefore, 240 into 12%. Their interest charge 28.8 finance cost. Now you can work out, other than that, I can't see any cost or benefit. Is there anything, let me know. As far as my knowledge, there's no any other cost we have to recognize. Right. Then you can take the net benefit. Net benefit. Net benefit is 170.4 million. Therefore, you will agree with the proposal. You can say the proposal is financially favorable. The proposal is financially favorable. Then you will give okay to the proposal. That you can say like that. The next one, what it asks, right. What are the alternative financing method? What you can do? Finance this working capital requirement. Your debtor balance went up, inventories went up. What you can do? Alternative financing arrangement. Now you have financed your working capital through a OD facility. What are the alternative way of financing these working capital? right? This is part B of the question. Alternative way to finance working capital. Right. What are the alternative ways? First one, you can negotiate with your suppliers to negotiate with suppliers to extend the credit period. You can negotiate with suppliers to extend the credit period. Number two, if you have long outstanding debtor balance, you can factor your debtors, factoring of receivables, factoring of receivables. Then obtain short-term loans. Obtain short-term loans. Those are some mode of financing arrangement. Part C, what it says. Part C එක බලන්න ළමයි අවසාන එක අහන්නේ. Part C. The finance manager of SPL was not happy on the extended credit period where he has to finance the sudden increase working capital due to the sudden change in credit policy. He is planning to take 3-year term loan to finance the incremental capital. Explain the suitability of the decision made by the finance manager on financing the incremental working capital requirement via a term loan. Now, when you are financing your working capital, there are three approaches, three ways. The approaches. First one, I will say, if you finance there are working capital, you can divide into two: permanent current asset and fluctuating current asset. Now, when we are maintaining inventory level, some specific level, that is a permanent inventory level, permanent stock level, or permanent current asset. But due to the seasonal variance, the debtor balance can fluctuate. The inventory you will maintain a buffer stock. Due to the seasonal effect, it will go up and down, right? Therefore, the sudden increase in working capital, we call fluctuating current assets. Therefore, those are fluctuating currents, they are temporary, not permanent. If they are temporary, the best way to finance this working capital is to finance them via short-term financing arrangement. That is fluctuating current asset. I will draw it here. You can divide your uh, current assets into two. Current assets. Current assets. They can be divided into two. First one is permanent current asset. Current asset and fluctuating current asset. Current asset. Therefore, permanent current assets are financed by long-term financing arrangement. Fluctuating current assets should be financed by short-term financing arrangement. Now, if this is sudden change, if this is a temporary one, you should not take term loan. Right, the best way to finance it through a short-term financing arrangement. But this sudden increase will be continued and it will be a permanent arrangement. Then you can look at for a term loan like this. Therefore, it depends on whether it is short-term or whether it is fluctuating, whether it is a permanent current asset. If it is a permanent current asset, you should finance them via long-term financing arrangement. If it is a fluctuating current asset, you have to finance them via short-term financing arrangement like bank OD. Either you can obtain short-term loans and you can factoring. Those are the way to do that. Right? Hope you understood that. Right. I'm little bit fast forward. Right. Next one related to decision theory, risk and uncertainty in decision making. Now this one, we have to construct clearly label decision tree showing all possible outcomes. We have to show all possible outcomes when we are creating a decision tree. All right. First we will read and thereafter we will draw the decision tree. Look at Star Product Private Limited is an apparel manufacturer which manufactures product X and currently sells 60,000 units per annum. Currently, they sell 60,000 units per annum. The market for the X will exist only for the next 3 years. Okay. SPL is presently experiencing a decline in demand for product X due to competition. If SPL does not take any action to defend the competition, the next 3 years sales will come down by 20% from the present level. Selling price per unit is 2,000, of which 60% is variable cost. That means assume 2,000 and 60% can 1,200. Contribution per unit is 800. That is 40%, right? Variable cost 60%. TPL will not increase the selling price during the next 3 years. The selling price will remain at 2,000. Selling price will remain at 2,000, right? If SPL changes the design of the product, which will cost rupees 3 million initially, annual sales are expected to be as follows. But an annual sales will be 70,000, 60% probability, 80,000, 40% probability. Further, due to this change, the variable manufacturing cost is expected to be as follows. Variable cost can be either 1,300 or 1,400 with the respective probabilities. SPL can carry out an advertising campaign which will cost 8 million annually during the 3-year period. Then the expected annual sales will be as follows. 85,000, 80% probability, 95,000, 20% probability. Okay. Due to financial constraint, SP will select only one option from the above two alternatives. That is changing product design or carrying out an advertising campaign. There are two alternatives we need to evaluate. Assume all cash flows occur at the respective year end. Draw a fully labeled decision tree showing the option available to TPL and, based on the present values, recommend the decision that TPL should make. Assume TPL's cost of capital as 12%. Right. You have discount this cash flow because 3-year cash flow will be there. And first you have to develop the decision tree. Thereafter, you have to prepare the which call expected values you need to calculate. Right. I will start to work it out. Now you have to remember things you have learned when it comes to the decision theory. In the decision theory, we have learned how to work out a decision tree. Right. I will take the calculations. Right. Now, when we are going to work out a decision tree, it always start with the square. Square kita පටන් ගන්නෙ, right? Then it all start with a square, right? Now this is the decision point. It will be construct from left to right. You have to construct from left to right. Then you have to work out from right to left, right? Now there are two alternatives are there. What are they? Change of product design or advertising campaign. Therefore, I will first I will take this one. Right one, and again I will draw again. Quickly draw. Right. Therefore, first one I will say this is a change in product design. That is one. Other one, advertising. Advertising. Those are the two options. If you change the product design, it says, if you go back and see, I will crop it and get back to here. It's a change in product design. Sales can be 70,000 or 80,000, right? There will be an outcome point we need to introduce, right? There will be an outcome point, and sales can be sales can be sales 70,000. 70,000 and with the probability of 60%. I'll say 0.6. Probability 0.6, right? Other one, sales 80,000, then probability 40%. Probability 40%. Right. In addition, not only that, it says variable cost can be either 1,300 to 1,400, right? Again, I need to introduce outcome point. Variable cost can be either 1,300 or 1,400. Let's see. Then variable cost equal to 1,300 with the probability of 40%, 0.4, and variable cost we see equal to 1,400. 1,400. Probability 0.6. 0.6. Right, that one branch is completed. Other one was sales 80,000. Again, this one I need to introduce. Variable cost can be variable cost equal to 1,300, probability of 40%. And variable cost 1,400 and probability is 0.6. Right. Now one branch is completed, right? One branch is completed. If I want to work out, I will name this as outcome 1, 2, 3, 4, right? Then advertising campaign, I will work out here itself, then you can understand. Advertising campaign, it says sales can be 85,000, probability of 80%, 95,000, 20%. There's no change in variable because nothing has mentioned, right? Then again, I will take this one. This one I can. Right. Right. Sales can be how much? 85,000. Sales 85,000 here. Sales 85,000. 85,000. Or it has a probability of 0.8%. And sales can be 95,000. 95,000. Probability of 20%. Probability of 20%. Right. Now we have constructed the decision tree. Remember, this is for two options, and we have to incur 8 million annually during the 3-year period for advertising campaign. Right. Now we need to work it out. I will say in these branches I will name in order to work it out properly. I will leave some space here. This is I will take as pointers. 1, 2, 3, 4. Here 1 and 2. Now I'm going to work out the first branch product design clinical. I'm going to work it out how to work it out because this has a discounting also need to be done. Option we can go the outcome outcome 1 first outcome maker sales units. Then you have to calculate selling price won't be changed, contribution per unit, contribution per unit, the sales unit, contribution per unit, then annual contribution, annual contribution how much, then we can calculate joint probability, joint probability. I will delete this one. Joint probability. Then annuity factor at 12%. Discounted cash flow or contribution. Discounted contribution. Right. I will make it short. Right. Outcome 1. What is outcome 1? Sales 70,000 unit. Variable cost will be 1,300. Therefore, sales will be 70,000. Right. Sales will be 70,000. Outcome 1 ekedi sales 70,000. Contribution per unit, because at this point outcome 1 ekedi variable cost 1,300. Therefore, your selling price won't change. 2,000 minus 1,300. It will be 700. Then annual contribution will be 70,000 units into 700, 49 million. Right. What is joint probability? Because 70,000 unit, there's a probability of 60%. Variable cost 1,300, probability of 40%. Therefore, we have to calculate 0.60% into 40%. Joint probability will be 24%. Right. Then annuity factor. Because this cash annual contribution you will receive over 3 years time. Then you have to calculate annuity factor for 3 years. Then you can work out 1 minus 1.12 power minus 3 divide by 0.12. Then your answer will be this much, 2.402 annuity factor. Now this is the annual contribution. This is the joint probability. This is the annuity factor for 3 years. Then you can calculate discounted cash flow 49 million into 2.24% probability discounted by using 2.4032. Then you will get this amount as the discounted cash flow or contribution for the outcome 1. 28 million. Then we will look at outcome 2. Again, may branch outcome 2. Outcome 2. Outcome 2. How many units? Still 70,000. 70,000. Contribution per unit. Now here 1,400. Your selling price won't change 2,000. Variable cost will be 1,400. Then it will be 600. Then 70,000 into 600. 70,000 multiplied by 600. It will be 42 million. Joint probability. 0.6 into 0.6. 60% into 60%. 0.6 into 0.6. 36%. Annuity factor, it won't change for 3 years. Now you can calculate your discounted cash flow, discounted contribution. Third option, third one, sales will be outcome 3. Sales will be 80,000 units, right? Variable cost 1,300 nang, 2,000 minus 1,300, it will be 700. Then annual contribution you can take, it is 56 million. Joint probability 40% into 40%. Yani 0.4 into 0.4 is 16%. Annuity factor, it won't remain. It will remain same, and you can calculate your discounted cash flow. 21,520. Fourth one, fourth outcome, this one. 80,000 sales. Yes, 80,000 sales, it won't change. Say variable cost 1,400. And 2,000 minus 1,400. It is 600. Then 48 million. Right, 48 million. Then joint probability. Joint probability 0.4 into 0.6. 0.4 into 0.6, 24%. Annuity factor, this one, then you can calculate. 27 million. Now entire branch I have completed. I have completed the entire branch. Remember change in product design. I will take the total here. I will take the total here. 113 million total expected total present value of contribution. Right. During this period, for the change in product design, you have to incur 3 million initially. Again, here 0 wala වැඩි incur කරගන්නවා මිලියන 3. Therefore, product design cost, you have deduct product design cost. You have deduct 3 million. Then you can get what is the value of net profit of this option. 113 million plus 3 million minus 3 million, 110 million. Value of the option. Value of the product design. 110 million 750,000. Right. That is the amount. Now you have to determine. Right. Now you have determined. This is the first option. What is the first option? Change in product design. Change in product design. Change in product design. Now I will go to the advertising campaign. Advertising campaign. Advertising campaign එකේ ගියොත් outcome 1 වලදී මේ විදිහටම අපි යමු. Outcome 1. බලන්න our sales unit 85,000. 85,000. 85,000. Contribution. Contribution වෙනස් වෙන්නේ අර කලින් තිබ්බ විදිහට 2,000 වලින් 60ක් variable cost එක එනවා 140ක් තමයි contribution එක වෙන්නේ. It will be 800 rupee contribution per unit. Then annual contribution will be 85,000 into 800. Joint probability, there won't be joint probability, 0.8. Then annuity factor remains same, remain. If your expected value will be 68 million into probability into discount factor, 130 million. Right, 130 million. Then outcome 2, it is 95,000. Contribution remains same, 800 per unit, and you can calculate total contribution. Its probability is 0.2. Discount factor for 2 years, so 3 years at 12%. Then you can work out 76 million into 0.2 into 2.40, 36 million, right? Then take the total, 167 million total present value of the contribution. There will be an advertising cost. You have to incur annually 8 million less advertising cost. Advertising cost. Advertising cost take 8 million. 8 million. Advertising cost එක 8 million. අවුරුදු 3ම ඉන්ක කරන නිසා මේක annuity factor එක multiply කරන්න present value එක ගන්න ඕනේ. 8 million into 2.40. It's a 19 million you have to incur. Then you can take the total. 147 million is the net profit of the option. Net profit. Then if you compare these two options, advertising campaign is more desirable because it gives 147 million present value. If you work out this value, now if I take promotion change in product design, present value will be 110.75 million. 75 million. But here it is how much? 147.95 million. If out of these two you can decide which one is suitable, advertising will be selected. Advertising will be selected. Then your value of the decision, present value of your decision, expected value of the decision will be 147.95 million. 147.95 million. That is how we can work it out. Right, I'm quickly running through, guys. Joint probability, how did it arrive? Actually, now joint probability 0.6 into 0.4. 0.6 into 0.4 because these value contain two probabilities, sales and variable cost. They have a two probability. Then you can calculate joint probability. Right. Hope you have understood and we have done the calculation whole arrangement. Now you have an idea. Actually, if it is have a leisure time, we can explain in detail, but I am trying to complete as immediately as soon as possible because now it is time passing because annuity formula එක ගන්න එක අපි ළමයි project appraisal වලදී අපි ඉගෙන ගත්තනේ. Right. 1 minus අපි ඉගෙන ගත්තේ මතකද? Project appraisal වල you might have learned it. 1 minus 1 plus r power minus n divided by r. Equation is annuity factor. 1 minus 1 plus r power minus n whole answer divided by r. This is the annuity factor formula. Yeah, already learned. Right. I will move to the Next question. Quickly, I will move forward. Now, quickly, I will explain this one and other question 6, 7. I will quickly run through with the paper. Right. This is a company, Sri Lanka SLP has two division A and B. Division A produced three types of chemical LMS using common process. During the period, 4,500 kilograms of material were introduced to the process at the cost of 2,000 per kilogram. The direct labor charges and other variable costs were 720,000 and 360 respectively. Each of the product can either be sold by division A to the external market at a split of point after the common process is complete, or can be transferred to division B for individual further processing into product LX, MX, and SX. In November 2024, which is a typical month, division A's output was as follows. Remember, guys, when we are going to make a further processing decision, the cost incurred in the common process, these cost. Common process cost like these 4,720, these are irrelevant, right? Because when you're going to make a further processing decision, the cost you have incurred is not relevant, right? It is not relevant because it is not relevant for further processing decision. Therefore, further processing decision, you have to compare. Remember, always remember, keep remember, it has to be incremental cost versus incremental cost to be compared versus incremental revenue. Incremental cost and incremental revenue to be compared. It has to be compared like this. Right. The market price, selling price per kilogram for the products both at a split off point and after further processing are as follows. Look at this value. L 2100, M 2400, and S 2600. LX 2600, MX 3600, SX 3500. The specific cost for each individual further processes are variable cost of rupees 300 kilogram for LX, variable cost for 350 rupees per kilogram of MX, variable cost of 250 per kilogram of SX. Someone has unmuted. Please mute your mic. Can't. Right. Okay. Right. Right. Further processing leads to a normal loss of 10% at the beginning of the process for each of the product being processed. Right. Okay. Now calculate calculate and conclude whether any of the product should be further processed in division B in order to optimize the profit for the company as a whole. Now you have to think, if you further process these products, what are the incremental revenue? What are the incremental cost? Right. Now we will see what are the incremental cost and incremental revenue for each product, and it says how many units you are going to manufacture. Clear? Right. Right. Now I will share the screen. Okay. Right. Product are L, M, S, LMS. We take a copy of the question. LMS. Right. units at split. Split of point එකේදී තියෙන units ගන්න තියෙන 1200 kilograms, 1400 and 1800. Right. Then price at split. Price at split 2100, 2400 and 2600. Right. Then revenue at split we can work out. Revenue at split of point. Revenue at split I will work out. This is the revenue. These are the revenue at split. If you further process, right? If you further process, right? Right. We will take price at price after further processing. Further processing. Price after further processing already given. How much? LLX වෙනවා. So 2600, 3600 and 3500. In addition, units after further processing. Units after further processing. Now, even though you insert 1200, 10% will be the normal loss at the beginning. Then you will get 90% out of it. 1200 is the units. If you further process, you can get only 90% out of that. Right? Same way, you will get 90% of the output. Now, even after further processing, what is the revenue? Revenue after further processing. Revenue after further processing. We will calculate now 2600 into 1080, 2.8 million. Likewise, you can calculate the total revenue. This is the total revenue. Then look at how much revenue have gone up. Incremental revenue. Incremental revenue. Your incremental revenue is 2.8 million after further processing. Before further processing, this much, 288,000. Likewise, you can calculate incremental revenue you have earned. Now, in addition, there's a variable cost of further processing of LX, MX, and SX, 300, 350, and 250. Now, we will calculate incremental revenue per kg after further processing. Incremental revenue. Now, 288,000 incremental revenue you have got after further processing of 1080. That is the output you have get. 267. Likewise, you can calculate what is the incremental revenue per kilogram. This is the incremental revenue per kilogram. Then compare incremental cost per kilogram. Incremental cost per kilogram. Here it is 300. Here 350. Here 250. Now, based on this one, this is the incremental revenue. This is incremental cost. Incremental revenue and incremental cost. Based on that, this one incremental cost is higher than incremental revenue. Therefore, this should be sell at split of point. Split of point එකේදී විකුණන්න කියලා කියනවා. Sell at split of point. You should not further process. This one 350, but you will get 933. Therefore, further process. It is beneficial for you, further process. This one also, you have to further process because your incremental revenue is greater than incremental cost. Therefore, any cost you have incurred at the beginning is not relevant. The common process cost is not relevant. This is how you will make the decision on further processing. This is how you will make the decision on further processing. Hope you have understood. Right. We are running out of time, but quickly we can go through the next question quickly. Now we will move to question number 6.
Excuse me, sir.
Yes.
Will you upload this session recording in the Excel sheet, please? Is it?
No, answer script and the paper will be paper and the discussion will be uploaded. I am not going to upload. I am doing just I am a facilitator only. But CA Sri Lanka will do that.
Okay, sir. Thank you.
Right. Next question number 6. I think it's a long essay type question. I will explain with the answer script when we are going to compute it. It will take some time. Now you can read. Engineering Division and Assembly Division are two profit centers of Sun Holding Limited. Engineering Division was formed to manufacture chips for Assembly Division and presently sells the excess production to the external market. Assembly Division manufactures personal computer for the external market and utilizes 2 units of chips per computer manufactured by them. That means Engineering Division sell chips to Assembly Division. If they want to manufacture 1 unit, they have to supply 2 chips. Now assume their sales to external market, they are manufacturing 30,000 unit mean they have to internally sell 60,000. Right, okay. And engineer, you can look at the selling price given external market. Variable production cost note number 1 in 906,400. It says variable production cost of assembly division include the purchase cost of chips and other variable costs related to the production. That means this include the internal transfer price as well. Divisional fixed production cost per unit 100 and 500. Variable selling cost note number 2, 250 and 500 note number 2 balamu. Engineering division does not incur variable selling and distribution costs for internal transfers. Fixed production overhead cost absorbed to the product based on the budgeted production capacity. Right, 5 million. Fixed product administration of 5 million is given. Divisional fixed production cost 100 and 500. Then you have to multiply by the capacity. Right. Company present price, among other determinant, return on capital employed is a key factor which determines the bonuses and other incentives of the divisions. It is SHL policy to give an additional incentive to its division for the achievement of ROC about 20%. Company at present prices all internal transfers at production cost plus 20% markup. In the management meeting held recently, manager of engineering division has expressed his disagreement on the ROC-based incentive scheme and the present transfer pricing policy. Definitely, he might not get benefited. You are the management accountant of SHL. Using the above information, you are required to calculate the return on capital employed for 2 divisions and explain why engineering division's manager has disagreed with the present incentive scheme. 8 marks. Find the additional number of unit chips that engineering division should be allowed to sell to the external market for the divisional manager to be benefited from the ROC-based incentive scheme. Find the impact to the assembly division and overall company from the sale of such additional quantities as calculated in part B above. It is supposed to have that SHL adopt dual rate transfer pricing policy chips whereby the supplying division will receive a price equal to market price less variable selling and distribution expenses, and receiving division will be charged at the marginal cost of chips. Calculate the profit and ROC of each division and show that the proposed dual rate transfer pricing system could be used to resolve the present transfer pricing issues. Right. Better quickly we can work it out. We'll do quickly. හිතට හරිනෑ වලට එක workout කරන්න නැතුවම යන එක. Right. We can. Right. engineering, assembly and total. Engineering, assembly and total company. Sales, internal, external. මම ඉස්සෙල්ලාම ගන්න මේ question එකේ අපි ගමු මොනවද අහලා තියෙන්නේ කියන ටික screenshot එකක්. Right. Right. First, we will work out internal selling price. Internal transfer price. Internal transfer price. Variable production cost. Variable production cost 900. Right. Divisional fixed production overhead 100. Then production cost එක එනවා 1000. Production cost 1000. Therefore 20% markup 200. එතකොට selling price එක වෙන්නේ ළමයි 1200. Selling price මේ transfer price. Transfer price will be 1200. Transfer price will be 1200. Therefore, internally, currently you are manufacturing 100,000. They need to sell 30,000. That means 2 chips each required. That means 60,000 initially you have to supply. That means they are currently selling 40,000 externally, 60,000 internally. And a 60,000 විකුණනවා 60,000 units internally at the selling price is 1200. This is the internal selling price. Internal selling price. Sorry, this should be internal sales. Internal sales 0. I am not taking to the total column because it is not sold to the external parties. Then balance sales externally, he will sell 40,000 units. 40,000 units. 40,000. External selling price is 1,800. Right. Assembly division, they sell 30,000 units. Selling price is 12,500. Then you can take the total, those are sold to external market, these to be added together. This is sales. Cost. This is sales to engineering division, but it is the cost to assembly division. I will take internal transfer. It is a cost to the assembly division. Then it plus minus, it will be netted off. You are not going to include in the total column, right? Then external purchase, variable production cost. Paid to external parties. You can see variable production cost per unit 900 each. 900, you are manufacturing 900 each, manufacturing 100,000 units. Then 90 million. Assembly division 6,400 per unit for 30,000. But remember, the 6,400 per unit include the internal transfer unit, making 2,400 it included there. Therefore, you have to remove that as well. Then what I will do, this 6,400, right, minus 2,400, I will multiply this by 30,000, then deduct this one. Then it will be 120 million. $120 million. Right. Then these are cost paid to external parties. 210 million. Because if you take these two together, it will equal to 6,400 multiplied by 30,000 kila kiyanne 192 million. Here 192 million it is equal 72 million internally, 120 million externally. Right, that is done. Then fixed production overhead. Fixed production overhead. Fixed production overhead 100 rupee per unit. 100 into maximum capacity 100,000. That is 10 million. Assembly division, it is 500 into capacity is 40,000 unit. 20 million altogether, it will be 30 million. 30 million. Then variable selling cost. I'm going fastly because if it is better if I can draw the diagram and explain, but I don't have much time to explain. But I will do quickly this one. Then variable selling cost 250. Internal transfers you won't incur any cost. You external sales 40,000 units. 40,000 units at 250 each. That is 10 million. Then here you are selling 30,000 units. Each you incur 500 rupee and 15 million variable selling cost. Then fixed admin 5 million each. 5 million each. Right now you can calculate net profit. Net profit. Profit of each division. Net profit of each division. And total. Now you have to calculate the return on capital employed. I will take the capital employed. Here it is 180 million, 180 million and 300 million. 300 million altogether, 480. Now you can easily calculate ROCE. 29 million divided by 180, it is 16%. Here it is 48% altogether, 36%. This is how, that's why manager of engineering division may not agree with the current arrangement. Right. Because they are not happy, because they are not entitled for the arrangement. But remember, they can sell any quantity to the external market. The next question they ask, I will go. Next question. Find the additional number of units of chips that engineering division should be allowed to sell the external market for the divisional manager to be benefited from ROC-based incentive scheme. That means out of 180, in order to get benefit, he need to get 20% ROE. Then in order to make 20%, what is the additional number of unit to be sold in order to achieve this one without selling internally while selling externally? Okay, we will work out. Because if you sell externally, we have to see whether there's an incremental benefit. Now, if they sell, now internally they will sell at 1,200. External selling price. This is part B. External selling price. External selling price. How much they have mentioned? 1,800. External selling price 1,800. And but you are not getting it entire 1,800. You have deduct selling cost. Selling cost, because you will not incur any selling cost internally. Selling cost is 250. selling cost 250. Then your net selling price, net external selling price, 1,550. If you sell internally, you will get 1,200 only. Therefore, profit, incremental revenue, profit of selling externally, 1,550 minus 1,200, it is 350 per unit. This is per unit lamai. Per unit. And then what is the deficit? In order to make 20% return, 20% ROCE on 180 million. Workout karam. 180 million. If you want 20%, you should able to 36 million, right? Current return, current profit. Current profit. Current profit is 29 million. Then what is the deficit? Deficit 36 minus 29, it is 7 million. Now you want to earn 7 million. In order to earn 7 million, how many additional units? If you sell 1 unit, you can earn to the external market, you can earn 350 rupees additionally, right? Therefore, if I work out this one, then I will, if I calculate additional units to be sold to external market would be how much? 7 million divided by 350. You have to sell 20,000 units externally. Additional units you have to sell externally to 20,000 units. This is the answer for part B. Now you can work out the remaining one. I will show you the answer script. Then if we have done like that, what will happen to profitability? Right. Part B, this one we have done. Now, once we have do like that, you will sell 80,000 external market and 40,000 internal market. Then you will get 20% return. Assembly division also get 29% return, but overall company return diluted to 26%. It is not good because you can see overall group return was 172 million, 36% return was there. Therefore, now what we have to do, now we can apply dual rate transfer pricing. Therefore, they will record at market price, they will record them at variable cost. The difference will be adjusted in head office level, right? This is a supplying division, they will record at market price 108. You can see 108 million, that means they are selling internally at a price of market price minus selling cost. Then on the other hand, they will record at marginal cost of 900 each, right? Or 800. This is how then there's no impact to the total company operation. Right, again, I will go back to the final one because it almost passed the time. We are running through the last question. This is linear programming model. Actually, here we are going to find out what is the optimum mix of plant 1 and plant 2 time. Since there's no time, I will select it to how to interpret this product one. This one I will go to interpret quickly because it will be much beneficial for you with the time constraint. Now this one, if you look at this one, XY, Z, they will known as the products. A, B, C are known as the material, right? Now you have received the final solution. Calculate optimal production quantities. Now X, this is product column. If it only appear 1 and 0, they are optimal product mix. They are in the optimal product mix. If it appear 1, here it's appear 1, right? Then if it appear 1, here it's appear 1, then it has to be they are in the optimal product mix. Therefore, X 4000, this is Y 8000. Therefore, optimal product mix X 4000, Y 8000. Then unutilized resources. If they have fully utilized, then in the solution row, there are some values other than 0. But C only contains 0 and 1. That means there's no opportunity cost of cost for item C. That means it is not fully utilized. Then unutilized resources, 600 kilogram of material C. Right. Then this is the optimal contribution of profit that you can earn, 5,680,000. That is the optimal contribution. Now here, this B mean material B is a binding resource. That means fully utilized. If you receive 1 additional units of B, what will happen to the optimal product mix and what will happen to the contribution? I will explain. Now currently you have 4,000 unit of X. If you receive 1 unit of B, the output will reduce by 1 into 10 units. Then it will be 3,990. This one, it will increase by 10 units because අපි මෙතන හදන්නේ මේක 4,000 plus. මම මෙතන workout කරන්න optimal product mix එක අදරකොට right product X වල X currently 4,000. If you receive one additional binding resource, it will be plus effect. Therefore, here here it is minus 10 into 1. Then it will be 3,990 units. Y currently 8,000 plus. It is a plus effect, plus 1,000 into 1. Then it will be 8,010. Right, that is the output. Then next one, then how it impact to the unutilized resources. Unutilized, it is again plus effect. That is material C, 600 plus. Here 1 into 1. It becomes 601 kilograms. Right. If you receive 1 kilogram of material B, the contribution will grow up by 800. Therefore, your contribution equal 5,680,000 plus 800 into 1. If it is 10 unit, it is 800 into 10. Then it will be 5,680,800. Right, that's how it will work. Assume if you manufacture any product other than the optimal product mix, Z is not in the optimal product mix. If you manufacture any product other than optimal product mix, it has a negative impact. Any negative impact. Therefore, if I work out optimal product mix, how it looks like, X equal to 4,000 minus, it will be a minus effect, minus 1 X වලට තියෙන effect එක 3. ඒ කියන්නේ 3 into 1. This become 3,997 units. Right. Y 8,000 minus. It is a minus 1. Minus 1 into 1. You are going to manufacture 1 unit. This become minus into minus, plus it become 8,001 unit. And product mix Z will be 1 unit. Now, if you work out, your total contribution will reduce by 440. Therefore, your contribution will be contribution will be 5,680. Here it is minus effect. Minus effect again, minus 440 into 1. Hammer unit take him 440 effect then it is a minus 440. That is how it will impact if you manufacture any unit which is not in the optimal product mix. There will be a negative impact to the product mix and the optimal contribution. It will reduce. Estimate the effect of contract from influential customer for a minimum supply of 200 kilogram is said to be supplied. මේකෙන් 200ක් දුන්නොත් මොකක්ද වෙන්නේ? එහෙනම් x කියවෙන මෙන්න මේ වගේ effect එකක්. x 4000 minus මෙතන 3 නේ තියෙන්නේ 3 into 200. එතකොට මේක වෙනවා 3400 units. y 8000 minus 1 into 200. So make a 8,200. 8,200. Is it will be 200. Okay, product mix right. Then it will happen to the unutilized resources for 600 minus 0.4 into 200. It become plus 680 kilograms, Your total contribution, how it happened, contribution for 5,680 to 440 into 200, This is how it will looks like, right? I have just run through these illustration because we didn't have much time to run through, right? I think you have get an idea how to work it out, and actually
Excuse me, sir.
yes.
Sir, can you show the answer paper of question number 7? Create a formula for linear program.
Yeah, I will show you because since there's no much time, I will show you the answer. Give me answer. Anyway, answer script will be shared with you. This is how you have defined the variables, and then profit working, you have to work out P1 and P2 working one is given, because if you have determined what is the best combination to run the operation. The coconut oil is the constraint, palm oil is the constraint, factory operating time is a constraint, process 2 is operating time is the constraint. 4 constraints will be there, and this is how profit will be calculated, and how this is how linear programming model has been developed. Right, answer script will be shared by CA Sri Lanka because I have already shared this answer script already. Right, everyone, we have just run through because it is a very fast forward session, because within a given time period I have to complete entire thing. Hope you have realized how extent you have to work out, and this will be anyway uploaded in the CA YouTube channel, and hope you have understood. If now the most important thing, you have to prepare for the final examination, and you have to spend this time wisely. If you properly organize, and if you properly prepare in this time period, you will be able to go through the exam. Right, we are winding up the session, and thank you for everyone. Everyone who joined. I think you have got the maximum benefit out of it, because I need to run through all the question within given period of time. And thank you very much, everyone. Wish you all the best, and Hope everyone will pass the exam and give your best shot in the examination. Wish you all the best. Have a nice day. Have a good day and spend your time wisely. Thank you, everyone. Thank you, CA Sri Lanka. And we will wind up the session for today and see you in as a members in future convocation. We can see you all. Thank you very much. Thank you, everyone. Have a nice day.
Thank you so much, sir, for the session.
Thank you. See you.